Good morning, everyone. I am Vishakha. Welcome to Crypto TV. Here are the news headlines. Bitcoin Ether vault as US economy contracts in Q2. Fed move eyed. US regulators ask Voyager to halt false and misleading claims. FTC tries to stop Meta from buying VR fitness app. Radiant closes $450 million fund to support Web3 and DeFi projects. Step counter app Sweatcoin raises $13 million to transition into Web3. Blockchain-based gaming platform Bolt.io buys Indian gaming studio NPL. US lawmaker writes to Google, Apple on fake crypto apps. And now the news in detail. Bitcoin vaulted to a week high while Ethereum, the second biggest cryptocurrency, climbed to over 6-week high on mounting hopes that the Federal Reserve would be forced to slow its pace of aggressive rate hike after the US economy contracted for 2 straight quarters. The rebound in cryptocurrencies were more a reflection of the broader investor sentiment for riskier assets, which was amply reflected in US stocks on Thursday. The S&P 500 ended 1.2% higher Thursday, building on its strong gains from the prior session amid hints from Fed Chairman Jerome Powell that the pace of rate rises would eventually slow. The technology-heavy Nasdaq Composite Index gained 130.17 points or 1.1% to 12,162.59. Data showed that the US economy shrank at a 0.9% annual rate last quarter, marking a second straight quarterly decline in gross domestic product, commonly believed to be an indication of recessionary trend. However, US Treasury Secretary Janet Yellen Thursday refrained from calling this a recession because other factors like the labor market show signs of a strong economy. Bitcoin was recently seen trading at $23,800, up 4.7% in the past 24 hours. The biggest digital currency earlier crossed $24,000 before slipping back into the current level. Ether traded at around $1,710, up over 6.2% in a similar time span. The currency earlier climbed to $1,774. All other major altcoins too traded higher. The Federal Reserve and Federal Deposit Insurance Corporation asked failed crypto firm Voyager Digital to stop making false and misleading claims in telling customers their funds were insured by the government. Bankrupt Voyager has been claiming that since it had deposits with Metropolitan Commercial Bank, it was protected under the Federal Deposit Insurance Corp scheme. However, the regulators said that MCB being FDIC insured does not mean Voyager as a company is also FDIC insured. The regulators have demanded that Voyager remove all statements, representations, or references that suggest that the FDIC insures Voyager and that customers will receive FDIC insurance coverage. The Federal Trade Commission has filed an injunction to inhibit social media giant Meta from purchasing VR Studio Within, best known for its subscription VR workout app Supernatural. The FTC claims that Meta is already a key player at each level of the virtual reality sector, with Oculus Quest, its App Store, and other instances as evidence of its dominance. The agency asserts Meta would substantially lessen competition or tend to create a monopoly in the VR fitness market if allowed to buy Within. FTC Bureau of Competition Deputy Director John Newman said Meta's proposition to buy Within was a way for the tech giant to eliminate competition. Variant, a crypto investment firm, announced that it had raised $450 million for a new umbrella fund consisting of a $150 million seed purse for Web3 projects and a $300 million opportunity vehicle that will double down on projects with demonstrated traction in their portfolio. Variant's portfolio includes a diverse range of companies in the crypto space, such as NFT platform Magic Eden, decentralized credit platform Goldfinch, and decentralized exchange Uniswap. Variant's third fund will focus on financial empowerment through decentralized finance, blockchain computing, Web3 consumer applications, and new forms of decentralized ownership. The Variant Fund 3 follows a $110 million second fund launched last October, which followed a $22.5 million debut fund. The Sweatcoin app has raised $13 million in its latest round of funding to transition to Web3 by expanding its existing Sweat economy ecosystem to offer crypto rewards for user engagement and launch a non-custodial crypto wallet. Electric Capital, Spartan Capital, Jump, GSR, and the Near Foundation are among the prominent blockchain investors in the funding round. Other high-profile participants in the round include Bijon Wagner, co-founder of Polkadot, Sandeep Nailwal, co-founder of Polygon, and Winnie Lingam, founder of Civic. With new funding, the team hopes to attract even more users through its existing step counting model and the launch of a new cryptocurrency called Sweat, which will be supported by the Sweat Foundation. Sweat will be available as an ERC20 token as well as a NEP141 token along with other EVM-compatible tokens. Bold.io, a Singapore-based social gaming platform, has acquired NFT Premier League or NPL, a Bengaluru-based Web3 gaming studio, as part of its ambition to become the Netflix of blockchain gaming. The move is the first acquisition for Bold.io, which plans to offer users multiple game formats with the same economy and rewards distribution system. Bold.io plans to host Originals, which are the games built, owned, and operated in-house, and also work with a network of partner studios to bring more game formats to the platform. Senator Sherrod Brown, chair of the Senate Banking Committee, has asked CEOs of Apple and Alphabet, the parent company of Google, to provide details on how the tech companies prevent some apps from promoting cryptocurrency scams. In the letters that were made public on Thursday, Brown reportedly inquired about the actions that Alphabet CEO Sundar Pichai and Apple CEO Tim Cook were taking to approve cryptocurrency apps for use in Apple and Android devices. The senator wanted to know how businesses determined whether or not an app was trustworthy and secure. Brown's letters came after the Federal Bureau of Investigation on July 18 released a public alert about fraudulent cryptocurrency apps. Between October 2021 and May 2022, scammers stole more than $42 million from 244 victims, according to the Bureau. It involved an app that used the name of a once reliable crypto exchange. That's all in the news today. This is me, Vishakha, signing off. And for more such updates, keep watching Crypto TV.